Hello and good morning, folks. Thank you for joining Almus Market Mornings, your daily dose of global financial update with your host Shikhar Garg. And today's day is going to be a bit different as the stocks dropped, yields went higher, and the currencies moved in the previous session. What a significant day it was. USDINR made a new all-time high and showed no respite at all during the day as well as off-market hours. Lots of stops got triggered, exchange actions got adjusted, and the central bank was more or less missing in action. So JK, what do you think, what exactly was going on in the markets and what should we be preparing ourselves for?
Hi, good morning, Shikhar. So yesterday was, for a change, rupee grabbed the headlines in the local market. So we started off with a gap up opening and never went below where we opened. And that was clearly a sign of market getting into stop taking mode. 78.50 was considered to be a strong resistance that market opened above that, and after that we had continuous buying, very good bids, and reportedly some outflows in the market. And more importantly, RBI selling was very sporadic and very minimal, as I could make out. And it was only about whenever we were reaching about 78, 90 that they were a bit strong in selling. Otherwise, the market buying had been dominating. So what suddenly changed that, we have been used to very narrow ranges of 7 to 8 paisa or maximum 10, 12 paisa. By the time we used to reach, it was RBI selling that was taking care of the market demand. And suddenly we are into a volatile period. And this is coming immediately after another RBI official spoke last week that RBI was keen on containing volatility. So the market took some time to adjust to this. Now question is whether this is likely to continue, whether RBI is allowing market to determine the rate, freely, and they will have a hands-off approach. I don't think so. It may be a one-off because of very large outflow. Quarter end is, on 30th, and there will be flows everywhere. In fact, all markets have quarter end related flows. So this could be one of them. We will know in the next say a few sessions whether RBI has changed their policy. I think with oil prices once again rallying and FX rate going above 79, government RBI will not be comfortable letting further fall in the rupee because that adds to the imported inflation. So we at the same time does not mean that we are changing the trend. The uptrend is very much intact. Maybe we will have slightly wider ranges for some more time because now part of the market thinks that we are going to 80, and some people think it may be good level to sell. So it's a mixed feeling out there in the market, but definitely the trend on the rupee has not changed. We just need to watch out what the central bank does in the coming days. I also would possibly expect some sort of large export covers also due to quarter end that might also impact in the next 2 days. That's about the rupee, but I think very good support at 78, 70 should now be holding, unlikely to break 78.50 without a large trigger or a very large inflow. On the global side, we had another fall, following a sharp rise last week in the market. And I have always considered these rises as a bear market rally because the factors driving the markets are all negative: higher rates, tightening financial condition, inflation, and the slowing demand due to the tightening conditions. All these, so even the corporate earnings, which are due some 10 days from now for the Q2, are not likely to be very warming. So we will see markets fall more, but these bear market rallies are always going to be sharp. It will confuse us and it will probably even bull trap us also. So again, we are firmly in the bear territory as far as Nasdaq and the S&P 500 are concerned. Market will, of course, slowly get into a long weekend mode because Monday is US Independence Day holiday. Before that, we have GDP data today from US and PCE core inflation data tomorrow. Once these data are out, I think market will go into a slumber, at least for next 3-4 days. On the global currency market, dollar is once again strong. As the yields are higher once again, and oil going up again, giving rise to fears that Fed may be hiking rates once again at a very faster clip. One more Fed officials are talking about uh, taking the neutral rate to above 3.5%. ECB's Lagarde yesterday did say that they will be getting into act as far as inflation is concerned. And at the same time, she also said they will activate on part of the bond purchasing firepower as a first line of defense against a possible debt market crisis coming. And this is particularly with reference to the peripheral countries whose bond yields have been rising much faster. So that is something that we will watch out. But the euro definitely above 1.06 technical resistance. Once again, let sharp fall from there to 1.05 levels. So we are still ranging in 1.05, 1.06 range as far as the euro is concerned, but higher yields in Europe as well as US, once again pushing the dollar yen higher. And I think the dollar yen traders are testing the BOJ's reaction as we near the all-time, rather the 2-decade high of 136.70. GBP, as usual, is faster to catch on to any bear market. And commodity currencies have slightly recovered because China said that they are reducing the quarantine period for the inbound travelers. So that was the only positive news yesterday. Data from US was weak on the consumer confidence side, and also on the manufacturing side. So nothing much to cheer about on the stock market as well as on the currencies, because dollars, the theme is that dollar is still strong amid all the uncertainties that is going on. So yeah, just to end, I'm saying I want to point out that, yesterday we mentioned about FIA holding in Indian share falling to its lowest level in 5 years. We also note now that Japanese side, the central bank of the country crossed a historic milestone, becoming one of the top 10 shareholder of 50% of all the Japanese companies. Now, this is following them reaching almost half of all the JGB market issuances, or half of all the JGB holdings in the market. So that's a massive one holder of the entire market. So that's just to point out a big anomaly that is we are seeing in the market. So uh, we are heading into another slightly volatile day for the rupee. Hopefully things settle down fast, and have a good day.
Okay, JK, and that was really brilliant. I mean, I am quite stricken by the fact you've given about the Japanese central bank. I mean, uh, holding or accumulating this kind of assets. Holding may not be the right word, but the accumulation of this kind of asset by the central bank is quite surprising. And another surprising fact was the comments by the Indian central bank's members on keeping the volatility in the currency low and then having this kind of move right after the same weekend. So markets are in a mixed position, and the reactions slash expectations for the participants are continuing to be mixed. What also we can see is from your commentary, the corporate earnings for Q2 in the coming 10-15 days isn't also so exciting. So more or less the whole sentiment looks grim for the time being, and let's see how long does this prevail, because the rate hikes that we're talking about to 3.5% or 2 to 3% on almost every nation is going to be quite significant with this recession looming, corporate earnings being low, yields moving higher, and currency stacking. I mean, there's a lot to watch out for in the financial markets, folks. We keep bringing you all the updates as much as possible. Uh, as of now, we sign off for today. We catch up again tomorrow. Thank you so much.